If you want to buy stocks here and ride the big move up, you need to understand three basic concepts. And in this week's video, I'm going to show you what those are, as well as a couple of examples. I'll also do my normal market analysis. We'll look at the stock, bond, currency markets, the crypto market. And then finally, I'll look at the day trade of the week on AUVI. All right, so when should we buy stocks? Well, we want to buy stocks when the crowd takes an interest. The best stocks to own, if you want to get those big, fast gains, are what I call alpha stocks. These are the stocks that lead the market. They're trading on their own story, and they make big moves to the upside, usually on very strong volume. Now, there's some of these every day in the market. Certainly, if you're a day trader, you can take advantage of them. But there's also swing trades where you might hold it for a few days or even a couple of weeks. And then there are position trades where we can hold those for weeks or months even. So in order to find these alpha stocks, you have to focus first on abnormal activity. Stocks that make abnormal price gains with abnormal volume. I'm going to show you an example in just a moment to emphasize this point. The second thing that we need to look at is the price moving up through some recent highs, or sometimes simply a downward trend line of resistance. And again, I'll show you an example in a moment. And then finally, we want to see the price breaking through this resistance with abnormal activity after a period of low price volatility. Now, by low price volatility, what I mean is the stock trading in a fairly narrow price range without a lot of movement up or down, just quietly going sideways, kind of boring. You want to go from boring to excitement. And the reason is pretty simple. Stocks make big moves when they have something going on fundamentally. So the company may have a new drug in the works. Perhaps it's an oil company that's looking for oil and they're close to discovering something. Could be many different things that drive a stock higher. What happens is the people that follow the company the closest, they usually get information like this first. And when they have some information that justifies the stock going up very quickly, they will act in the market aggressively and they create the abnormal activity. And so that's why we want to have stocks that are boring, nothing's happening, and then they come alive with abnormal price, abnormal volume. Now, when that happens, as long as the chart pattern is good, there's a good chance it's going to continue higher. But I want to be clear, it's not 100% that it will go higher. And so in these situations, you also have to have good risk management. And if the stock goes back down to where it was, then you call it a loss and move on. All right, so let's look at a couple of examples. Now I'm going to start with a swing trade. This is a stock that I traded this past week. It made an abnormal price move with abnormal volume on January 3rd. And prior to January 3rd, you can see that the trading action was very calm and quiet. Now this is a 15-day, 15-minute chart. So this would be for the swing trader. I'll show you an example for a longer term trader in a moment, and then at the end of the video, I'll show you an example for a day trader. All right, so it's boring and quiet. It comes alive with abnormal activity, and at the same time, it also breaks a downward trend line of resistance. So it's breaking through some horizontal resistance, and it's also breaking this downward trend line of resistance. Now, I spoke about risk management. When I buy this here, I plan to lose if it falls down through that floor. And you can see that for the next 1, 2, 3 days, it really didn't do much, but it also didn't go through the floor. And then it came alive again here with a little bit of extra volume. And that's when it started its really parabolic move to the upside. Ended up being, I think, probably the best performing stock of the week. Now, let's take a look at a longer term example. This is a daily chart. And what I want you to notice is this day right here. It looks very similar to that last example, except now we're looking at a daily chart. The volume was abnormal. The price action was abnormal. Prior to the abnormal day, it was boring and quiet, and it broke through resistance. It also broke a downward trend line of resistance. And over the next 2 months, or month and a half, it made a big move to the upside before giving what I call a bursting bubble sell signal right there. It hit a new high on very strong volume and closed below the open. That's what a bursting bubble is all about. All right, now I will come back to this concept at the end of the video. I'm going to show you a day trade that I did on Friday that did this exact same thing, but on a much shorter time interval, and the stock made better than 50% gain over the next few hours. But first, let's check out the overall market, see what is in the cards for the general stock market. So this is the S&P 500 chart and daily chart. You can see that it's gone steadily higher since November as concerns about interest rates rising have gone away, and now we're actually thinking about interest rates falling. And then last week we had a little bit of a pullback, which put me into a bit of a cautious mood, but the market rebounded quite nicely this past week. Now volume was very light. Monday's a holiday for the stock market, Martin Luther King Day, and so it will, it's typical you see volume diminishing going into a holiday. Let's take a look at the 3-year weekly chart, which is the long-term view. And you can see that the trend is up and it's at some resistance where we are fighting to break through that resistance. Will we break through it? I think we're going to stall here a little longer, but hopefully we can make that break. Certainly it is a cause for a concern that the market has come up to this resistance level, because typically when markets rally into resistance, they usually get stuck. Now we have been stuck for 2 weeks. Is that enough? I don't know. I think we may take a couple more weeks, but ultimately the momentum is up and I think we should break through. All right, let's take a look at the NASDAQ 100 now. So QQQ is the symbol for the NASDAQ market, and we'll start with the 1-month chart this time. And there you can see the pullback last week, and then this week gave way to a break of trend on the 8th. And we've been moving higher since, and we're now getting close to that resistance level and starting to quiet down there. And again, remember, Friday was very low volume because it is a long weekend. I think a lot of people just took the market day short or shorted the market day on Friday. How about the small cap stocks in the US? IWM is the symbol. Now there's more concern among the small cap stocks that interest rates may not go down as much as hoped. The expectation was probably for 3 interest rate drops in 2024. And then a strong CPI number kind of spooked the market a little bit. And so we've had a little more weakness in the IWM. Unlike the S&P and the NASDAQ, which we've been able to go back to the highs, the IWM hasn't participated. And that's a bit of a concern. It also tells us that the market's concerned about where interest rates will go in 2024, and that could be a drag on these small caps. However, we haven't broken the upward trend line yet, and that's what's critical. We've held that. I've drawn it across these inflection points here. Got close to this one as well, and we're just hanging out right at the trend line. It's going to be real critical next week to see if this trend line can hold, because if it doesn't, then we may see more weakness down into this level. And it's all going to come down to what the market thinks the Fed will do. Now here is the intraday chart. You can see on Friday the market gapped up but failed to hold the gain and came right back into this pattern here. So we're kind of stuck in this little sideways trading range. And what you want to watch next week is, do we break up out of it and then it plays catch up to the large caps, or does it break down? A lot of that will have to do with the bond market, which I'll show you a chart for in just a moment. But first, let's take a look at the Toronto Stock Exchange. There you can see a nice steady uptrend. There's some mining sectors that are doing well. Gold is pretty good, but uranium is red hot. And then the oil and gas industry has started to stabilize. So that's why the Canadian market holding up a little better than the US market over the last while. You can see the trend here is up. And if we look at the 3-year chart, you can see that we have more upside to that level of resistance at the old highs. There's quite a bit more room to go. Really, the Canadian market is trying to play catch up. It fell behind because of its commodity emphasis, and now it's trying to play catch up. All right, well, let's look at some commodities. How about gold, GLD? GLD chart, quite choppy, as I've said in recent weeks. There's a lot of volatility there. Had a decent break of this little pullback line. Probably going to get up here, but a little bit disappointing that it closed below its open on Friday. Again, volume was fairly light, so I'm not too concerned about that. Let's take a look at the long-term picture. You can see that the trend is generally up, but it's very choppy, and it's fighting with this resistance that is held up over a year, almost 2 years basically, that resistance level is held up. The momentum is up, but it's stalling at this level. All right, how about oil? USO is one ETF that tracks oil. You can see that oil has been in a downward trend for a few months, but it's building a rising bottom, and it's trying to break that downward trend line. So if it can finally get through this and start to move up, then it's good. But until then, I think you still have to be cautious. Notice the sentiment stock score is 36. That's low. We want this to climb up through 60. And if it can, that's a sign that the buyers are coming back, much like we had back here when the stock scores were low and then they started to climb, and that sort of correlated with the first break up from a rising bottom, and that led to that nice strength. So we need to see that in the oil market. We're not there yet. All right, let's take a look at some currencies now. UUP, which has this kind of messy chart because of the gap, but it is still pretty stable and starting to build some optimism. Looking at the shorter term time frame, you can see that there's a bit of optimism building. Watch for the US dollar to get through that resistance level on the ETF, and if it can do that, then we may see the US dollar start to move. I think that's going to be largely dependent upon what markets expect for interest rates and that sort of thing. All right, let's move on to GBTC for Bitcoin. And you can see the upward trend is intact. Of course, this week, big news for Bitcoin in that there is now, it's now been approved by US regulators, the SEC, that there can be spot ETFs for Bitcoin. And it's sort of buy the rumor, sell the news. Here's the rumor. That's when the market broke through resistance with abnormal price action, with abnormal volume, from low volatility, all those things I told you at the top of the video. And it went up, 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 starts to go parabolic. The news comes out, pulling back now. It probably will pull back to the trend line, but that doesn't mean we're going to break the trend line. I do think we're destined to maybe go at best sideways or possibly down to the trend line, bounce, falling top, and then break down through that. More than likely, we continue the upward momentum, but I would watch for this because it's quite possible, given that now the news is out on these ETFs, that we could see a little bit of weakness in Bitcoin. All right, final chart we're going to look at is TLT, which is our bond market chart. You can see the bond market had a nice rally that was supportive for stocks. That meant interest rates went down over the same time period. We've had a little pullback in the last week and a half, 2 weeks, and that has been driven by some concerns that maybe the Fed won't rate or lower rates as much as expected in 2024. But really, it's not unreasonable for a market to go up, make a pullback, and then continue the trend. So what do you want to watch for? Well, let's take a look at the 1 month chart, make it a 60-minute chart. And what we want to watch for is a change of trend. So here was the upward trend, and now we're in this little downward trend, and we're starting to break that. So that could be the sign that we're going to reverse and start to move up again in the bond market. Watch this ETF. If it can start to move up through 97.40, 97.50, then we're probably going to continue the upward trend, which will mean interest rates come down, which will be supportive for those small cap stocks and allow them to hold that support zone. All right, so let's get into my ratings then. For the US large cap and NASDAQ markets, neutral on both time frames. Really, the issue is bumping up against long-term resistance. Small cap stocks, a little worrisome in the short term, bearish. Still neutral long term. Canadian stocks bullish on both time frames, a little better upward momentum there. Gold and oil neutral on both time frames. I would say gold looks a little better than oil. US dollar neutral in the short term and bearish in the long term. Bitcoin bullish on both time frames, but showing some signs of a top, so be a little bit careful there. And then the bond market, long-term bearish, because really the trend is still down for the bond market, but the short-term trend is improving. It's neutral to slightly optimistic. All right, well, I said at the top of the video that I'd give you an example of a day trade that made that sort of same signal. And here's an example of that, AUVI stock that I traded on Friday. And I traded it because it started to show this abnormal activity right at the start of the day. And so on that alone, it was that first requirement where it was abnormal and trading with good liquidity, really good liquidity, very actively traded. What I don't want to do is I don't like to chase trends. So I never want to be a buyer when the trend runs up. I want to be a buyer when it just starts to move. I want to buy the breaks of pullbacks. Now this little yellow dot right there tells me that on that 1 minute candle, there was abnormal price gain with abnormal volume on that very short 1 minute interval. So just like we can do that on the daily interval, the weekly interval, here it is on the very short 1 minute interval. So that was the buy point. And you don't know if you're going to win or lose, so you always plan to lose. Put a stop down in this zone here. Market never came below that all day, but it took a while. And I actually thought, oh, it's going to be a dud. This trade isn't going to work. And then it started to come alive right here. Another abnormal price gain with abnormal volume. That's what that little yellow dot means. That's my action candle indicator, which we show in our Stockscores active live service every day. And then boom, sudden rally, caught me by surprise. Was quite happy to see it on what I thought was pretty quiet Friday afternoon before a long weekend. Went up very quickly, sold it somewhere in here, take the money and run. A quick trade on a stock that showed what we look for. Breaking from low volatility, abnormal price action, abnormal volume through a resistance level. It's very simple, and yet most people don't think in those terms, but try it this week and see how it works for you. Hope you've enjoyed this week's Market Minutes video. If so, click on the like button, subscribe to the channel. Most importantly, trade well.